Yes, fellow viewers, this is your boy Fritz. Please, today we want to talk about student loan. But before we start, please hit the subscribe button for more videos about student loans. Uh, Today, I want to bring the importance of private loans. What kind of private loans can you take as a student? Those students who are also international students can take these loans, but some of them require some uh, kind of collateral, but some don't. So you just have to know which bank give provide loans to which university. So what I want to do here is that I want to tell you some banks and some credit companies that provide cheaper rates, loan for cheaper rates, and certain universities, you know, are being considered that. So you can look at these loans and see the companies and the banks that give loans to even to international students and local students, which are private student loans. So these private student loans are similar to federal loans. So in the fact that they can be used to pay for school expenses too. So it's not only used for your tuition. You see, so taking out a student loan means that you will be responsible for paying back the amount of money borrowed after your grace period, which is typically 6 months period after your graduation, or like say when you drop out from school, you have to pay back these loans. But unlike federal loan, a private student loan is not backed by the government. You have to know that FAFSA is different, which is for government. Instead, this type of college loan is backed by a bank or say credit union or an online lender. You see, it's quite different. The federal loans generally have better terms. They have better repayment plans, and they do not require a credit check. But there is a limit to how much money you can borrow towards your degree. So it's quite different from the both private and student and federal loans. So what can you consider when looking for a private student loan? Is that you have to there are two questions that you have to you have to ask yourself when searching for this right private educational loan. First, how much do I need? And second, how much can I comfortably afford? These two numbers might not be the same, and that is when you will be. So you have to decide how much for a college loan you are willing to take out before you go in. So you ask those two questions, which are very important. Here are some few other things that to take into consideration when you do your search. You have to take into consideration your credit score. If you don't have an excellent credit score, you run the risk of getting a high APR. That is the interest rate, or being denied the loan altogether. So your credit score has a very major role to play in these private student loans. So will you need a boost to it depends on how you are, your credit, the situation of your credit. You can get good loans. So if your credit is good, you don't have problem with this loan. The APR rates are always considered in most of these loans. Not only do you want to compare APR rates among the lenders, make sure that you also want to figure out if a fixed or variable interest rate is better for your unique financial situation. You want to check on those issues. If they are unique on you, or you want to make sure that they match your financial need, so that you don't get into those issues of trying to get an expensive APR. The other thing to look into is the loan term. What terms and rates are the lender offering that you need? Because some terms are, you have to read the terms of agreement. Can you adjust these terms easily in the future, or are you locked in? Those are questions you have to ask yourself in these loans, these private loans. Do they math of a longer loan term? Because once you do that math, even though it might mean lower monthly payment, it can also mean paying more interest for the life of the loan. So make sure you check on the loan terms. Another aspect to check on this private student loan is the discount offered. Does the lender offer any discount for being a pre-existing member, setting up auto pay, or by having more than one product through them? Even saving maybe 0.1% APR can save you a few $100s in the life of your loan. So these are things that you have to consider, when taking those loans. Consider your current budget. How much do you have as your current budget? It is easy to assume that once you graduate, that you will secure a high-paying job and be able to afford any student loan. This isn't always the case. So, can your current budget support your future monthly loan payments? Those are the questions you have to ask, because they give you a period of grace, about 6 months after your graduation. So you have to check on, can I pay this loan after graduation? Those are questions you ask so that you don't have to fall prey of not having a job within that period after graduation. Then the student loan is an issue for you to pay back. But those are the requirements. Why you aren't required to pay on your student loan until after graduation? Paying as much as you can while in school, while help you out significantly. This is a requirement for you. Any fees, those are also consideration. Is there any fees? Those are things that you consider, which is important. Are there any fees? Are there any charges for this payment? Are there, if there is any, if there is any prepayment penalty, a penalty for paying off the loan early. If you are applying for a private loan, student loan, to see your eligibility and check rate, be sure to get all your quotes within 30 days. So your credit report shows only one hard inquiry. So make sure that you check on these items that we mentioned, because those are the things that you have to check when you want to go into these private student loans. Then the other question is how to apply for these loans. After you have done all your research, it is time to fill out a private student loan application. So remember, if your credit score is lower the excellent range, you will have a harder time getting a competitive APR. So if you have the time to raise your credit score before applying for a private student loan, then you can do so. If your credit score is still too low, or your credit history hasn't been fully established, you will need to find a family member or a trusted individual with an excellent credit history that doesn't mind co-signing a loan with you. They can do that co-sign. Maybe a family member can help. Being a co-signer is a big financial responsibility. If for some reason you fail to pay your loan, your co-signer will be responsible for that. So you can take somebody you trust, your family member, your mom or dad, who can co-sign for you. So those are other options that you should consider while filing for these private student loans. Filling out a private student loan application is straightforward. It's not like FAFSA where you have to wait, but you and your co-signer will need a few important documents. The following document that you need for this private student loan your social security number, your date of birth, your address, your identifying details, your pay stub, your monthly pay stub is needed. The proof of asset, monthly rent or mortgage receipts. Another information that is needed are your financial status. You should also be prepared to share the following. Those following are the name of the college you are attending, when you will be graduating, the total college cost, and how much you are requesting to borrow to cover those costs. You also need to fill out the private education loan application self-certification form, which is provided by your school and will show the lender exactly what cost you face for your education. So some people may ask, what are the difference between the private and the federal loans? Both federal and private loans come with their own set of benefits, though. The private loans are different, though, but they have some. The federal loans are assessed through filing of throughout the FAFSA, the Free Application for Federal Student Aid (FAFSA), while private loan must be applied through your local bank, the credit union, or the private lender. So it's quite different. For those who want to apply through FAFSA, the Free Application for Federal Student Aid, you can apply through their website. But for the private loans, it's different. You have to apply through the bank, of course, or the credit union, or the private lender that you want to apply to. So it's quite different. Both types of loans, though, must also be repaid. Though federal loans have more flexible repayment options if you become unemployed or maybe low income earner after graduation, you can be reconsidered. Yeah, some private students loan lenders offer some grace when it comes to financial hardship, but this is very temporary if it is offered at all, because they are very strict on these private loans, like the federal loans. The federal loans, they know sometimes you can be unemployed or maybe a low income earner after graduation. They will consider you. They have some perks on that. Private loans allow student borrowers to access more funds for schooling costs that surpass financial aid packages. Another benefit to private student loan is that there is no deadline to apply. If you miss your chances to file a FAFSA, private student loan are still available to help you to afford for your tuition. Those are the benefits that you have between the private and the other loans. Unlike private student loans, federal loans do not require a credit check or a co-signer in order to qualify. You see, so those are the perks between the private loans and the federal loans. The federal loans do not require any credit check or a co-signer, maybe your father or mother, to sign. No. But the private loans require co-signer, they require those assets. They'll check on everything, your pay stub, everything. So those are the difference between the private student loan and the federal student loans, and you can get all those. Then let's look at subsidized and unsubsidized, because these federal loans are offered to students as subsidized and as unsubsidized loans. Subsidized loans are available only to undergraduate students who demonstrate financial need. Those are subsidized. These loans do not collect interest while the student is in school, or if the loan is deferred or in forbearance after graduation. Those are the subsidized. The interest rate on subsidized loan is fixed, but borrowers are limited to how much money they can borrow these subsidized loans. So it's quite the same thing like when you have government trying to subsidize it for you. It's quite different from the other loans. Similar to subsidized loan, the government sets a fixed amount interest rate for direct unsubsidized loans. However, the loans accrue interest while the student is in school, or if the loan is in a state of deferment or forbearance. So those are the difference between unsubsidized and subsidized loan. Uh, these are things to consider before taking any loan, maybe through the government or through any other means. You know what? Then let's see the private and the public college. Both private and public colleges are great school choices, and student loan work the same for each. Typically, private colleges are smaller and costlier. So take note, if you're going to a private college, know that they are more costly because they are more profit oriented colleges. Public colleges are funded by the state, the government, and donations, and therefore they are less expensive. So you should consider those both private and public colleges. Private and public colleges costs should be considered when you do your research for student and financial loan aid options. If you have those options, you have to consider between private and public colleges, so that you know your cost and how much you can spend for the years that you want to study. Many private colleges will allow students to transfer credit as a junior, meaning you can complete 2 years at a cheaper public college first. So it depends on how you program it between those two private and public colleges. Then remember, most of these loans, the private loans, they require co-signs. Your parents can co-sign these loans, along with the option to have parents or other family members co-sign a loan. Parents can take out a loan for your education too. This should be the first financial option considered when exploring different financial aid options. A parent student loan or a direct plus loan is a federal loan that a parent or dependent student can take out for educational costs. So it's very important for these co-sign loans and parent loan. So this put the parent as the only person on the college loan, and it can be a risky financial move if the parent is set to retire in 10 years or less. Also, it should be considered, unlike the federal student loan, a parent student loan is not eligible for most repayment plans. So it's quite expensive and risky. But if your parents can afford it, then you don't have to worry about all these different programs. You just have to, your parents can take any loan for you. They have the job, they have the pay stub, they have a good credit score. They don't have to worry about all things that you as a student you'll be worrying about. So it's a good way to get the subsidized or subsidized, depending on how your parents can afford it. But without said, make sure you know that there are certain banks that are well known and they have very lower APR rates, very lower interest rates that you can go for. The number one that I know of is Prodigy Finance. Prodigy Finance is very famous. They give a very low cost APR. There is also Empower Finance. Empower Finance is well known. I know students, a lot of students who have used Empower. There's the Quorum, the Quorum Federal Credit Union. Quorum Federal Credit Union is also very, very famous, and they have good deals for students. Then there's this Stilt. Don't forget, Stilt is also a very popular bank that help a lot of students with these private loans, and you can always take those and go for your studies. So thank you for watching. We're going to talk much about this students loan. We're going to explain them in our next videos about Prodigy loans, the Quantum Federal Credit, the Steel, and the Empower. Those four are very famous. We're gonna talk on that in our next video. So don't forget, hit the subscribe button. Let's bring you more video and updated information about student loans. Thank you very much for watching, and see you next time.